So we're going to show what an imbalance is. Yeah. So imbalance is, in my explanation, is when the market moves in a direction, usually fast, but it doesn't always have to be fast. Yeah. But ultimately, it doesn't pull back to allow people to get into the market. It just goes in that one direction quickly. Yeah. And it could be a medium pace as well, but ultimately it doesn't pull back. Yeah. So an example where it doesn't really so that is what I will call an imbalance. Yeah. So look, we're zooming in. This middle candle here I'm referring to, yeah, for the recording. Yeah. So that middle candle, look, it went all the way bearish. Yeah. So actually, let's go into the wick. Where's the wick? So from that, why is it? Okay, no. So that previous candle, the wick is there. Yeah, you can see I'm just moving it to the left. Yeah. So from that wick to where the body closed, all of that is an imbalance. Yeah. And then something else we call a fair value gap is the gap between two candles in the middle candle. Yeah, so it's from on a bearish move, the fair value gap is on this middle candle. Yeah, it starts, the top of the fair value gap is the lower wick of that previous candle, which is there. Yeah, and you draw the box all the way down to the upper wick of the candle on the right side. Yeah. And this one, the upper wick is very tiny, or it's basically non-existent. Yes. So if I draw the box, can you see it's from the wick, drag it out to the right, pull it down all the way, basically goes all the way there. That whole box, can you see now visually, it shows you that basically the imbalance of this bearish candle. Yeah. So price, it did not pull back, even on this upper wick, it did not even pull back a little bit to fill any of that. Yeah. Whereas this candle before, let's draw another. Should I delete that box or keep it? Because I want to draw another one on top. Delete it. Yeah. Okay, so here, this middle candle, we're trying to draw the fair value gap here, because it created imbalance. So the imbalance here is basically, let me just get rid of that. So look, price, it started there, yeah, opened there, and then obviously went up to make that wick, but then it came down all the way there, yeah, and that previous candle it pulled back there, yeah. So from that lower wick, which is there, yeah, can you see? Yeah. It lines up the dot. Can you see the dots? It goes across and it lines up with the bottom wick. Yeah. So price went all the way down, pulled up, and it closed there. So that whole gap from that lower wick to there is what we call an imbalance. Yeah. To make it a fair value gap, this candle needs to finish forming. So when it comes to this candle, when this one is closed, then we can get the fair value gap of this candle. Yeah. The fair value gap is the lower wick of the previous candle to the upper wick of the next candle. Yeah. Whereas that previous one we showed, that candle on the right, it didn't have an upper wick. No. Whereas this one, the candle on the right, it does have upper wick. Yeah. So that imbalance that this candle made, some of it was filled by this candle when it made the wick, because that whole imbalance, basically, that next candle, can you see it pulled back a little bit into it, basically say about a quarter away. Yeah. So that thing I was saying, you might want to read that statement for the recording.
Market creates imbalances. Imbalances are created when the market moves very fast in one direction. So the market would usually fill imbalances completely or partially, or won't fill it at all. But the market has a high probability to fill imbalances, even if it is a little bit, compared to not filling it at all.
See? So in this one, what did it do? Did it fill the imbalance, some of it, or all of it, or none of it?
Some of it.
Some of it. Very good. So now that's imbalance, and then the fair value gap. So the imbalance is just, you see this candle.
Yeah.
Once that candle is done, we can get the imbalance, because from that lower wick to where that closed, that's the imbalance. Yeah. To get the fair value gap, this candle needs to form. Yeah. Once that candle is formed, then you can get the fair value gap. So the fair value gap is from the lower wick. Can you see the lower wick?
Yeah.
So I draw the box there, drag it out to the right, pull it down all the way to where?
To the wick
of
the candle.
Which candle?
This candle.
This candle you're pointing to. Yeah. To where?
to the other candle.
No, I mean, where do I drag it to on that candle? To down there?
Yeah.
Huh?
No. To the candle, bottom of the candle there. That one there. Yeah, on the right. This candle, the wick there.
So where it is now?
Yeah.
Is that the top wick or the bottom wick?
Top wick. No, that's the bottom wick.
Is this not the bottom wick?
Oh, yeah, sorry, yeah. For that candle, yeah, that's the top wick.
No, all candles, top wick and bottom wick is the same. Because this is at the top, this is at the bottom.
Yeah. No,
bullish candle is the same.
Yeah.
Top wick, bottom wick is the same.
Yeah.
In all candles, top wick and bottom wick is the same. Basically, the high and the low is the same. So this gap in this middle candle, from the wick to the wick, and that gap in the middle, that is what ICT calls, or we learn as a fair value gap, or FVG. Where did the writing go? Go to the right, top right. Can you see it says FVG? That is what he calls the fair value gap. Yeah? And then the imbalance, what I said, yeah? So now look, we show another imbalance here where it filled it plus some, yeah? This, and we're on the 1 hour time frame, so it's going to be applied to any time frame, yeah? So this bullish candle, look, very bullish it went, yeah? But, so the imbalance starts from that wick on the left, the high, because if we're bullish, we're going from the high, yeah? Previous candle high, from the high, which is there, we go up to the close. The market closed where? Where did the candle close? This bullish candle.
Yeah.
Where did it close?
Would mean price.
Yeah, the candle. Where did it close?
2, 3, 4, 1.
No, it doesn't matter. Point it to me.
Oh, sorry. Yeah.
Yeah, okay, yeah. So that, once this bullish candle closes, that distance is called imbalance from this wick to the close, yeah?
Yeah.
So, now look what the next candle does. The next candle, does it fill all of it, some of it, or none of it?
Most of it.
Again, the imbalance is from there all the way to there.
Yeah.
Yeah?
Oh yeah. Fills
so
all of it.
Does it fill all of it, or some of it, or none of it?
All of it.
All of it. Very good. And you give another example. Imbalance. Bearish candle went all the way. So where does the imbalance start from on this candle?
From here.
No.
Huh? No, imbalance starts here. Sorry, yeah.
Why?
Because the wick filled.
Very good, very good. Yeah, okay, so from there it starts, and it goes all the way down, and when does it finish, the imbalance?
There.
Huh?
About there, because that filled that, innit? No?
We're doing imbalance, not fair value gap, if that helps you understand. So where does the imbalance go to?
Down to the wick.
No.
Down to the end of the close of the candle.
Okay, very good. So the imbalance is from the low of the previous candle.
Low of the previous candle.
To the close of the candle.
To the close of the candle, okay.
Because the imbalance is based on just this candle. This candle has not formed, or it just started to form, yeah? And then now, that candle on your right.
This is what Shoaib Ghori keeps on going on about.
Your candle on the right.
Yeah.
Did it fill some of this imbalance? None of it?
Some of it.
Some of it, yeah?
Yeah.
So now your fair value gap, how do they draw that? From that wick to what wick? Or what low, or whatever?
It'd be to the way it filled a little bit.
Okay, so I'll pull it up. And that is your fair value gap, yeah? And now we can see what happened on the next candle. This fair value gap box.
Yeah.
What happened to price on the next candle? This bullish candle.
It went up. It touched it a little bit. Okay. It filled it. I mean the imbalance.
What did he do? Did he go inside it?
Yes, he went inside it a little bit. Partial.
That's it. Very good. Fantastic. So what day is that? Is that yesterday? So we'll see on the okay, so we will go on the let's go to 5 minute, yeah? So let's zoom in on the smaller time frame to see how that happened, yeah? So that big box is our 1 hour fair value gap, yeah? and that little push into the fair value gap is this on the 5 minute. Can you see how on the 5 minute, look, if I draw it, where's the bloody pen? The price went down. It made that fair value gap on the 1 hour, and price on the 5 minute, you can see it much nicer. Like it pulled all the way, touched into it, went bearish. You know, you get your 3 crores as well, and then it continued going down. And then it also broke, obviously, the low. Can you see that? Can you see this how piecing together high time frame and low time frame as well?
Yeah.
So that 1 hour fair value gap coming to 5 minutes, seeing it going tapped into it, doing bearish candles, going for a little sell, and then catch it, move down. Yeah?
Yeah. Yeah. Well,
So that was the imbalance done, yeah? 11 minutes. Fair value gap imbalance. Do you want to do a few more examples of that? Or shall we go into market structure?
yeah, let's stick with the market structure.
Okay, I want to do a few more Fibonacci's, yeah?
Yes.
Yeah, go into that a bit, yeah? So, just for the video, right. So this is Monday's price action, which is yesterday, yeah? So how we can see a Fibonacci, or how we can see when we can draw a Fibonacci, is the market has to, in an uptrend, price goes up, high, pulls back, high, low, goes up. When it starts to go up, we can draw a Fibonacci because we draw from, like, say price, it was going up there. So we draw from here, the low to the high. And this is your Fibonacci retracement, which is the higher low.
Yeah.
And then from the Fibonacci, we also get the expansion, that how far is it going to go up. And we also catch an entry here because it rejects the Fibonacci level here. And then it went up, shoot up, yeah? So let me just delete all of that. And then in a downtrend, price went down, pulled up, came down again. So now you can draw price from the high to the low, your Fibonacci retracement, see that the candles reject it or whatever it is, catch your entry there or whatever, and then price continues to go down. We use the Fibonacci to get expansion levels or something like that, blah blah, how far is it going to go, and that's it, yeah? So now we're going to apply that in the market. Draw it, see. So we're in Monday, yeah? Price is bearish in New York Friday, and then this is your Monday, well, Tokyo, yeah?
Start first session of the Monday week.
So from here, if you go back and follow the market, and we draw our structures, yeah? So look, I'm gonna lock off this bit, and this in this box, I want you to just like that draw the structure. Take them off. You can draw a box or just circle it like that.
Whatever
Up to you. You tell me what.
You tell me.
It doesn't matter what.
Well, just
you choose one. Box or
box.
draw. Box.
Well, if you're on the drawers, just leave it on the drawer.
Nah. Okay, let's change the box to blue. Okay, now yeah, your box is there. Okay.
Yeah.
So
price went from there. We went down.
Yep.
To a low.
Okay. So draw a box.
Yeah. So we got a low here.
The box isn't gonna come by itself.
Or is it on this one?
You delete it. No. You drew it, but you didn't drag it out. So. Up. Click it. Then drag it.
That's alright.
You want to draw it from the bodies, yeah? High, low, low, high from the bodies, yeah? You don't need to include the wick.
Okay.
Let me just show you. Because we have to get faster at this stuff, yeah? Look. Undraw for the bodies there. So it includes the bodies and the wick. You know, a little bit can be in there. It doesn't. You don't need to draw it like here. We're not looking at the low. We're looking the high, low, high. We're basically drawing it from the bodies. Yeah. And you can include some wicks. It's not like hard and fast to rule or anything like that. Yeah. But predominantly we're focusing on the bodies. Yeah.
Yeah.
Okay. So
the next one is here.
Let me change that color to orange. Yeah. So now you draw the next one. Is that including the bodies or just the wicks?
No, it's just the bodies.
I don't see any bodies in the box.
Alright, I've done it above the.
So should you move it down or just leave it?
Yeah, just move it down a bit. There, yeah.
On the top, should you bring it down to
Yeah.
make it less big?
Yeah.
Okay.
There.
Click the chart somewhere else. Okay. Follow price. Go back. Follow price. Explain it to the camera.
Okay, so yeah. The price went up, and then we started getting bearish again. It went down. We got a low here again.
You wanna draw it?
Yeah.
You don't need to draw it that big.
Okay.
It doesn't need to be that big. You're making it small.
What do you mean?
Look at me, yeah. Look, focus and see how I'm drawing it. Look, I'm drawing it on the body. Mainly, predominantly, what is it? The body of the wick.
The body.
And is my box the size of South America?
No.
Or is it relatively small?
Yeah.
You wanna draw the size of South America?
No, size of England.
Size of Antarctica?
No, size of England.
Size of Russia?
No, size of England.
You wanna make it specific?
No, Bangladesh, England. Yeah. Bangladesh even.
You wanna do it like Sylhet or Luton or London. Specific.
Like Sylhet.
If someone says, where do you live? England. Alright, mate. England is a big place. If I come to visit you, should I come to Manchester Airport, Glasgow Airport, Belfast Airport, or should I come to Luton Airport? Exactly. So you need to show me exactly, not like. Is anything even there?
No.
You know what I mean? Like you gotta be like, make it concise and the high, low. Mainly is you wanna focus on the bodies. Get the bodies in there. If you get a little bit of wick, you should get a little bit of the wick, but the focus is on what? The body. The wick, we don't care. If the wick gets in there, yeah, no problem. But usually the wicks, they go over more. So that's why if you draw the box at the wick, like in this one, if you draw it at the wick, look, you miss the whole bodies. You get it?
Yeah.
The main volume, orders, blah, 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 all of this stuff is in the bodies. Yeah?
Yeah.
So now, following price, continue explaining.
Yeah, so consolidated for a bit.
Okay.
And then went down again.
Okay.
And then we have another low.
Okay.
So.
Do you want to draw that?
Yeah.
Or are you drawing it up rather than down?
I wanted to get the bloody wicks. I mean, nobody got it. The body in. Is that right?
No. Those bodies at the bottom, they're naked. Oh, no, okay, now they're in there. You don't need to get the wick. The wick does not matter. Why are you covering the wick for?
Okay. Yeah,
what does it need to be covered with?
No, the bodies.
The bodies. The wicks, it doesn't matter. Don't give a shit about them.
Okay, the bodies.
So why are you drawing the box like as if it's a consolidation? It is a consolidation, but you want to just draw it for the low.
Yeah.
So why are you drawing it like including the whole bodies? You do more down? Okay, that's too much. It was kind of, I'm being quite specific, but it's important to be specific rather than big.
That's right.
So follow price again because you're slow.
Yeah.
I'm going to move the mouse for you.
Okay, it went up.
Okay.
Price went up, then carried on going up again, and then we had another high.
Okay, you're going to draw the high. And move. Okay. Oh.
Yeah.
Yep, very good. Okay, what did you drag it for?
To get those the third candle in.
It doesn't matter what the third and fifth candle is, just about that.
Alright. Price then went down again. Had another low. Here.
Follow price.
Price then went up again a little bit. Can we class that as a high?
Yeah, you could, yeah.
Okay, so we had another little high here.
Is that Noddy?
Yeah,
Is it Mercedes, electric Mercedes?
Yeah.
It's coming to pick you up?
No, it's come to pick up his kids.
Oh, are they here?
Yeah, they all come from one school.
Huh?
They all go to one school, so they get picked up together. So yeah, then we consolidated here for a bit.
Okay, stop. Put a line there. Put a line there. That's where we are. Everything after we're gonna see.
Just check.
Guys, your dad's outside.
That's much better. Traffic.
So
Lesson lampah about kisujua, man.
okay, so
and I can feel it. I did my tasbih Fatimi here because I knew I was going to be on 3 hours. I'm feeling that.
Yeah, no, I'm surprised, you know.
Yeah. I was going to text you earlier and say, excuse me if I, doze off or think I'm on 3 hours, but that made sure I didn't twice. That's your going out of his way and make sure you keep me attentive. And as you might know, I don't know if you noticed, in the beginning, like 2-3 hours, the first 30-40 minutes, I used to think it. Like sort of, but now that rhythm, because I've never studied, but I've done it for ages and ages. But now I'm sinking in what you're saying, that it's about mushking it.
Mushk, that's it.
Yeah, so I'm gonna piss over Raja and Q Banks and the rest of them.
Don't need to piss on them, but
no, I don't. I mean it in a, I want to be different, become stuff like that. I don't really like that. Okay. If you ever hear this, Q Banks, forgive me. Raja, if you hear this, forgive me.
So, price.
But I've got a long way to go, though.
So, if we look to the left, we're on the 15 minute now, yeah?
Yeah.
This is your, so if we're here,
yeah.
If we follow price, where's your major high?
What, going this way or this?
No, if we're here,
yeah,
we can't look right because nothing has happened on the right.
No, so the major high is here.
No, follow price. And where's the major high? Look, you've marked everything there. Tell me where's the major one. Look, follow price. Look, don't confuse yourself by trying to think of an answer that you can't figure out. Look, step by step. You lost something. What do? You
look for it.
Retrace your steps.
Yeah.
If you can't think of what did I go do? Look, I woke up, I went downstairs, went to the kitchen. Just follow the steps and you'll find it. You get it? Look, same way we're here. Don't need to do some next complicated thing that's confusing yourself. Yeah. Simple. Look, that's it. Look, follow the price. Is this a major one or a minor one? Minor. If we follow price, is it a major or minor? If we follow price, is it a major or minor?
Major.
Very good. If we follow price again, is this a major or minor?
Major.
If we follow price, is it a major or minor? If you follow price, is it major or minor?
Major.
If you follow price again, major or minor?
Major.
Very good. You got all of them right. Bloody hell, man. Give yourself a tap on the back, man.
Well, a slap on the back. Should have done it 3 years ago, mate.
Yeah.
Waste of 3 years.
Actually, should we label that? Major, minus.
Yeah.
Yeah? Should we label it? Should I label it?
Yeah.
Yeah?
Or should I write it down as well? No.
No. Just for the video, I thought I'll write major. Major high.
How many days have we done? Have we done like years and stuff? Or?
Years?
No, we haven't.
do you mean?
How many days are we doing of studying now?
How can we do years if it's
No,
only been like 2
no,
weeks?
meaning like no. It seems like I don't know, man. It's how many days?
We've done about, I think, about coming into 9-10 days.
Subhanallah. For 19 days, man.
And the other day I said to you, realistically, I think you need about 50 days before you can take the training wheels off and push you, give lots of money. Yeah, go, let's see you ride the bike.
How long did it take Alal's Mashuk's son?
Not long, maybe.
Within 1 year was he?
Yeah, in a few months.
MashaAllah, Barakallah.
MashaAllah.
So how many hours was he doing study?
His studying was like live market, that kind of study. Like he's woke up, what's the market? Okay, yeah, I know the candles, trends, and stuff like that. Those candle and trend things maybe about a month because we used to do lessons every Friday night basically. But Friday night we're talking about a good 2, 3, 4 hours. We'd see 2, 3 hours minimum, 2, 3 hours, 3 hours, and those 2, 3 hours a bit more fast paced compared to you because they weren't that slow.
Sharper.
They're a bit sharper.
Yeah.
So in their 3 hours, they were going through what me and you go through in about say 8, 9 hours.
Allah.
Because they're a bit like quicker in it. It's like even when you draw a box, no offense, but it's like like half of you will die and you're still gonna draw like whatever you want. You know what I mean?
Okay, that must be quite irritating, bro.
You know what? You're the first person who's like a bit slow, and I'm like, what have you been bro?
Yeah. Sorry about that, man.
Nah, but
I must have put some serious patience into you over the last couple of what's this geezer on, man?
another thing is because you're older, yeah, it's like you can't even be like, oh, you want
Yeah. It's like now I can see man the guy goes to Fatiha and he's like,
it's like imagine a Qadi, yeah, and he's got
it's basically that's exactly what
Sasa
it is.
from the mosque come to read to
20
him.
years
Yeah.
later he's come of love Fatiha saying he was like
Now he's thinking, let's not pull his mistakes out because we'll pull his whole Fatiha and the guy's gonna go crying. He's gonna start crying. Even like when we go Jamaat, even when we go Jamaat and do Tajweed, yeah, it's like you Ikrama or like the other guys, some of the other guys like Ikrama or Gulamba, they got good Tajweed, yeah, but. And you're wondering, like, this Tassa, his recitation is not great. Why is he not like pulling his whole Surah Fatiha apart? He's just telling him 1, 2 things. But the elders say like that, bro. Sometimes you pull too many out. The guy might literally start crying. You know what I mean? Like, and if it's a younger guy, even an older person, they might think, they rip me apart. I'm never gonna come to my again. Because they might get a bit emotional about that thing, man.
A lot of people are like that, bro. Insan is.
So can you see a marked what is that say?
Major low, major high, major low. Sorry, minor low, major low, major high, minor low, minor high.
So, it's like in the army, you got major, well, you don't have minors, but you just got majors. Yeah. Here you got your Mr. Major Low, Mr. Major High, we got Mr. Minor Low, Mr. Minor High. So, we want to see, this stuff, I'm not even going to say about slow bit, but like, what I'm trying to teach you, this just one Fibonacci thing I want to draw to you. So far, it's taken us about 20 minutes to even get here. We're not even drawing the Fibonacci yet. And like say a bit more faster people, yeah, within the first 10 minutes we would have already got the Fibonacci drawn on where I want to draw it, yeah. So now we're gonna draw the Fibonacci, but it's nothing, it's just slow for me. It's actually a problem on my side for like me. I need more patience. It's not a problem on your side. It's just so if we go left, where's the major high?
There.
Okay, and So that's like your Fibonacci. So where's the major low after that? Following that? Okay. Going from that, where's the major high? Okay. So for this pullback that happened here, this major high, where do we need to draw the Fibonacci from? Which 2 points?
From the low to the high.
We're in a downtrend.
The downtrend is from the high to the
Point
low.
to me which 2 ones.
So from here.
No, this is the retracement.
So it'd be from the major. This from here.
Okay, that's 1.
Yeah. And
point 2.
There.
Is that a minor or a major?
No, it should be there actually.
Is that a major or a minor?
It's a major low.
Okay, very good.
So the major high.
From where to where?
From this major high to this major low.
Very good. What are we drawing? Chocolate rainbow?
No, we're drawing a Fibonacci.
Fibonacci, alright. So just retrace from here?
Yeah.
You sure?
Yeah.
Okay, what is that called?
The major high.
And to the minor low, yeah?
Major low.
Major low?
Yeah.
Where is that?
There.
There? Is that there?
Yeah.
You sure?
Yeah.
Okay. Let's just drag it out to the left a bit so you can see those. You see those retracement lines.
Yeah.
If I draw it here,
yeah,
does those lines go over that pullback?
No.
So do I want to drag it out to the side of it?
Yes.
So it comes
so
over there.
Cover all
and
that
this
price.
this line here, that's the next Fibonacci point. So you need to line up with what?
The wick.
The wick. So Fibonacci, is it drawn wick to wick or body to body?
Wick to wick.
Wick to wick. What is a wick? Is it a low and a high, or
could be either?
It could be either. Very good. Very good. And a body. What is a body?
It's the body is a price.
Yeah, no.
Yeah.
The 2 points on a body, what are they?
The opening and the close.
Very
of the
good.
price.
Very good. This is very simple stuff, but you need to dumb it down a little bit to get your brain digesting this stuff. Yeah. So now, if I put a huge circle there on the pullback, yeah, that's your Fibonacci retracement of this move there, yeah. What did it come to?
63.
63. Actually,
and yesterday you were saying the golden ratio.
Golden ratio is 618, but 63 is a custom one I made.
Which you made. I wrote that down.
Yeah, I saw you wrote it. you wrote Utingi's level, yeah. So if I draw that Fibonacci out again, so here, alright, I can maybe get in the market here, but it's like market has already gone down already, yeah. So if it does pull back again, then I can get in the market. Otherwise, I'm gonna let it go, yeah. Okay. Follow the market, because you don't want to just get in a FOMO. That's a FOMO. The market already done the retrace, already gone down. It doesn't make financial sense for me to go in, because if I'm gonna do 1-to-1, you know what I mean. It's like, it's not worth it, innit? It's like business, you know what I mean. You're not gonna go buy something for £1 to make 1p on it. No.
You want to make at least £1.
You know, at least double the money. You know what I mean. And that's actually 1 to 2 risk reward. You spend £1 to get £2, and obviously £1 of that is profit. But in this, that £2, the full £2 is profit. It's different. This is 100%. There's no cost. Whereas that, actually, I'm just thinking about it. You spend £1 to get £2, but £2 you got minus your £1 cost, then you get your £1 profit. Whereas this, you risk £1 to get £2, and if you don't lose, then you didn't lose that £1 anyway. You got that full £2 is yours. No cost to minus from there. So we see, okay, in Asia, price is pulling back. We're getting very happy because it means we can catch an entry. Okay, here done like a little doji.
Doji yesterday, I read the book. Price is indecisive at the moment. We don't know where it's going.
So price, what did it come to here?
It came to a high.
No.
It was bullish on the 60. Came to the 63.
63. And can you see this stuff? You can't even make it up, and there's no coincidence on that because it's all algorithms on that. Yeah. Look how the body is bang on the 63 line.
Yeah.
You see how strong Fibonacci is.
Yeah.
And Fibonacci is just based on number sequences. Because they say, like ICD says, that the whole market and that is booked on like algorithm and computers. So look here, you come to the 63. Either you could there's different ways to do the Fibonacci. Either straight away without even it going there. Before it even goes there, you just put order there. 63 for sell. So you would have actually got in on that one there because that wick there tapped into the 63. Yeah. Or you can do whichever because it can come to 78.6. So you can just wait for rejection and enter manually. Yeah.
Oh, okay.
So if you're doing the manual way, look, okay, it's rejected off that one bearish candle, and we're gonna, if you want to be a bit optimistic and just catch it straight away off the first sign of rejection entry, we'll do a stop loss of around 40 pips. Gold, I do 35 to 50 pips stop loss.
All the time, yeah.
That's a range, so it's,
yeah. So normally you keep it to that range.
35 being low end, 50 being top end. Oh, I think the other day we actually spoke about it.
And why do you make the distribute of that 35 and 5?
Because from what I've seen trading gold, that stop loss size is enough to hold pullback.
Okay.
Yeah.
But it doesn't. The other 5, it's not a big difference, is it? Because like you said, 35 to 40.
No, 35 to 50.
35 to 50. So the 15, is it because of the way the price is moving?
Yeah.
Accordingly, you'll
choose. Yeah. Like if like here, look, that's 40. Yeah. Like if I do 50 for this trade, that's a bit big. Yeah. I don't need that big. 40 is, it's alright. Doesn't look too small, not too big either. That's it. Fantastic. Ticklos, wow. It's the name of the game. You get your T and your expansion. The first one is
272.
27%.
Yeah,
we just say 27%. Yeah. So you got your TP there, and just to be like on the safe side, you can read the number there. It tells you the Fibonacci each level in brackets. It tells you what the exact price is at that level. So you see 63%.
Yeah.
In brackets, it tells you the exact price. 786 is Bismillah apparently. In brackets, it tells you the net price. Look here. 27 in brackets tells you the price. Can you read the price for me?
Yeah. 2316 spot 251.
251. Yeah. So let's just round that up. Yeah. When price is going down, we round up. When price is going up, like bullish, we round it down. Yeah. Do you get?
Okay. When price is going bullish, we round it down. When price is going down, we round it up.
Yeah. So here we round it up to what's the next whole number? From 16. Point, like it was like 2 whatever it was, 2.5 whatever it was. Yeah. What's the number if you round it up?
What do you mean? 231600. 20. Say 20.
What's the next full number?
30.
No.
From
2316.25. What's the next round number from that?
2017. 2017. Okay.
Because if you do 2330, then half your trade you wiped it off because you rounded it up.
After the decimals.
Yeah, we're just talking about basically the first whole number.
Yeah.
So we round it to 27.
That's right,
so basically it reduces the TP by about 7 pips roughly, yeah? But it's like, the low hanging fruit. When you get low hanging fruit, even though gold, you will just smash it anyway, but we'd rather be safe than sorry. So, which the TP is still, how much is that?
Target 12.95, so 12 pips.
No.
Eh?
Okay, it says there as well. What's that?
1,295.
But remember, we have to divide those numbers or multiply those numbers. Do you remember?
Divided by 10.
Okay, so what is that number divided by 10?
12,000 divided by 10 is about...
That's not 12,000. What number is that?
12.
What number is that?
295.
Read the whole number.
1,295.3.
Okay, so where did you get 12,000 from?
No, yeah.
Okay, so divide this by 10 is?
It's about 110.
You just have to move the decimals.
110. Well, 12, yeah.
No.
If you move the decimals, it's 1200.
If that's already 12, okay, let's do an easy one. Yeah, that one is 12.9. Yeah,
Yeah.
that one you multiply it. Yeah,
129.
Yeah. So how many pips is that?
129.
What did you do? Multiply that number by
10.
10. All right. That one is divided by 10, but clearly the brain wasn't allowing the division. The multiplication was easier. So how many pips was that?
129.
For this trade, yeah. Stop plus 40 pips. Look at the risk to reward. 1, 2, 3.24. So every 100 quid, you're getting 324 quid. Fat trade started from, what was that, 3:15 a.m. It finished at 6:30 a.m. So about 3 hours 15 minutes roughly. Fat trade, yeah.
Yeah. That's in the which session is that? Asia, innit?
Tokyo, yeah. It actually finished in Tokyo, started in Tokyo as well. But look how we use.
And what day was that?
This was Monday,
yesterday.
Yesterday. The lesson we missed.
And I couldn't catch.
No, you didn't catch.
No, that's what I'm saying. The trade I took, I couldn't see that.
I can't remember. Did you even take trade?
Yeah, I took a trade.
Yeah, so.
And I cut the loss.
But yeah, I don't think you fully know Fibonacci. Then.
No.
Today we
I looked at it yesterday.
Today we started to think, but you see how we pieced together this trade.
Yes.
Just the Fibonacci and the structure. Yeah.
I need to go through this lesson again. I need to get piece from Sahaya and a cup of tea.
No.
What time is it?
It's 20. 4:20.